Hello, ladies and gentlemen. My name is Renee Herndon Lopez, and on behalf of the CAFR unit, I will be going over to the 2017 year-end closing for the CAFR unit's responsibility for that function. In this year-end closing, we will be going over the changes to the closing instructions. We'll be talking about the new CAFR packet deadlines. We'll be talking about the affiliate and fund affiliate chart fields. There seems to be some problems with agencies and their understanding of how to handle them. Again, we will be talking about items that we have already seen when we're running ledger reports that CFOs need to address before the end of this fiscal year. And we'll talk about some upcoming trainings that the CAFR unit is going to be holding in the next few months. First, we will be going over changes to be aware of in the closing instructions. The change was in the accounts payable area for accruing accounts payable. So I need to make sure that you guys understand the account code 296900 versus the account code 202900. We're going to talk about the deadlines in regards to these two account codes. And we're also going to talk about how these account codes and the changes, how they affect the request to pay prior year bills. Account 296900 has been used for years, and it is called the Accounts Payable Year-End. This account code is designed to accrue for invoices and goods and services that have already been rendered by 6/30. So, for example, today's date is July 20th, and of course the due date for vouchers to go in accounts payable is July 20th. You know that you're not going to be able to get the voucher in on time. So you would put that invoice on the request, the 296900 request, so that you can make sure that it is accrued and put on the expenditures for fiscal 17 instead of coming out of your budget for fiscal year 18. Agencies need to be monitoring their PO listings and make sure also just check on your accounts payable listing, all the stuff that you pay monthly, weekly, recurring, so that you can make sure that you have accounted for it all. The biggest problems that the CAFR unit sees that agencies are not putting on the 2969 listing is, one, the GSD invoices, two, your do-it invoices. Again, remember, these two agencies that you pay are not normal due-to-due-from relationship. These agencies are internal service funds. They're like a business. So these agencies are just like any other invoice that you get from Staples or from B&M or anything of that effect, and they need to be on that listing. The other one that we see often is travel. Due to the fact that there's not POs for travel, a lot of agencies overlook putting their travel on the 2969 listing. Like last year, the dates are pretty much the same. You need to send in the request to the CAFR unit by July 24th on a Monday. We notify you by Wednesday, July 26th, if your request has been approved. And the CAFR unit is pretty good about getting even the same day on Monday if you send it early, or even Tuesday, letting you know if your request was accepted or not. The entry to book the 2969 accrual needs to be done by July 27th. A change on a year deadline also has been all the vendors that you have on your 2969 request must be paid by October 20th. We will be reviewing the following week to ensure that all account balances have been cleared out for the 2969. If you get an email from us, please clean out your account immediately. If you do not, the CAFR unit will be doing a journal entry to zero out that account, but unfortunately our offset will be fund balance. One of the big changes for the 2969 account is regarding budget. In the past, the CAFR unit, if you did not have enough budget, would just override the budget and allow the entry to be processed, and then of course it was paid through accounts payable. Well, that's not going to happen this year. So if you do not have enough budget to process the journal for 2969, it will not be overruled. The agency then needs to do is determine which vendor or vendors are causing the budget error. Okay, and after they determine, then those vendors need to go on a new form. The new form is for the 2029 account. It is also attachment AG. Okay, so The new form will be used for anything that is causing not to be processed in share via budget. There's going to be allowed one vendor per form, so you cannot combine, let's say you have 10 vendors that you need to put on there, you cannot combine them on one form. You have to do 10 separate forms. Now, I did get an agency who had already called because they already went through some of the year-end instructions, and they have an exception, or they feel they have an exception to this. As I have told them, an email to Ron requesting the reason for your exception, and if he approves it, then of course we will allow more than one vendor on the form. But at this juncture, you have to get his approval. Okay. This form must be signed by Ron, the agency CFO, the executive director, and IPA. Okay. Once we get the new form, the 2029 form with the vendor, now we will be looking at it at the department level instead of at the P code level instead of department level. So share if you have department level budgeting would have caused that journal not to go through. But do departmental budgeting, then you do P code level, then that's another situation where you really don't have sufficient budget. So what the CAFR unit again is going to be doing is then they're going to be looking at these requests at the P code level. So if there is enough budget at the P code level, then we will allow the journal entry to go through, and we will allow the payment to be processed through accounts payable. But not enough budget. The amount will be accrued, so we'll let the journal entry go through, but the payment will not be allowed to be processed. You cannot process the payment through accounts payable, or you can and you cannot process it through your request to pay prior either. So the agency is going to have to get a deficiency request, and until that is approved, the agent or the vendor cannot be paid. Okay. The CAFR unit will also be monitoring to ensure if this scenario does happen, there has to be an audit finding. So as you can see why they are requiring IPAs to sign, so that IPAs are aware that you might be going over budget, and they should be expected to then again give an audit finding. So numerous instances of using the 2029 account instead of processing normally through the 2969 could jeopardize the CFO designation, so be careful. Okay. Normal in the past, if an auditor found an item, let's say in August, that he felt needed to be accrued for fiscal year 17 and not for 18, an agency still can post this, but the agency has to fill out the request form. So just like I explained before, you need to fill out the 202900 attachment AG request form, one per each form, and then needs to be signed by everybody. There's sufficient budget. Go through it. You can pay through accounts payable. If not, again, you will have to ask for a deficiency appropriation. So here's an example of the form. As you can see, it requires all those signatures, and as you can see, it's one vendor per form design of this form. So based upon all this, you will not be allowed to do the 54799, basically the request to pay prior years, until after your audit is done. So if you in August realize, oh my, I have an invoice, I normally send in the request to pay prior year, it's not going to be the process from this point forward. You will be filling out the 2029 request form and sending it in, and then the journal entry also needs to be sent in, and so that we can ensure all these amounts are accrued in the proper fiscal years. So, but once your audit is closed and finalized, then of course, if you have any invoices that come up for prior year after that point, definitely they will be then following the process for the request to pay prior year bills. So now that I have completely confused you regarding all that, we'll go over the new deadlines for the audits. Hopefully everybody is aware of that almost all state agencies' audits are now due November 1st. There's a few agencies that have an exception, and their audits are due the Wednesday before Thanksgiving. Here's an example, or here's the print screen from the audit rule showing when the due dates are. So based upon that change of upping the due dates, now of course the CAFR has new deadlines. Agency rep letter. It is due August 31st. Okay. In that letter, you should be sending your schedule of your deliverables along with your audit plan and your milestones. The agencies that obviously that their audits are due not November 1st, but due November 22nd, their presentation letters are due September 21st. So, in the past, the CAFR unit used to ask for our CAFR packet a month ahead of when your audit was due. It's not going to be the case this year. The CAFR packet deadline is the same deadline as when your audit is to be turned into the state auditor. So you are requesting that you send your CAFR packet in on November 1st, the same day that your audit is due to the state auditor. In this packet, we expect you to send the draft audit. In that, we expect to see the financials and the notes. We do not need to see the findings, so if you want to exclude that, that is fine. If you want to send the whole packet that does include it, that's fine. We do not look at the findings. We just look at your financials and your notes. I also need you to send your due to due from reconciliation form, your transfer in transfer out reconciliation form, if any prior period adjustments, obviously that form. And by this date, you should have sent in all your fund financial journal entries and your government-wide journal entries. If not, they are due on that date. If you are not able to meet this deadline, you need to let Ron Spillman know immediately. And please make sure you CC your appropriate CAFR accountant so that we stay on the loop so we can work with you on how to help you, if need be, on getting these deadlines met. If you forget to send this deadline or to comply and send an email, you could jeopardize your CFO. The subsequent event letter seems to be causing some confusion for some agencies. This letter is not due when the CAFR packet is due to the CAFR unit on November 1st. Let me explain. The subsequent event letter is for the CAFR unit only. So since the CAFR is months after all the other audits are done, so we have to disclose in our financials any subsequent event that is material that has happened from the audits were done by agencies, which for most of them, November 1st, to the point in time when the CAFR is getting ready to release. Normally, we're around March, April. Based upon that, that is why we send out that letter in March, April, for you to notify us that anything, for example, you sold some bonds or you had a massive lawsuit that's going to cost millions of dollars, we need to disclose that in the CAFR audit that a subsequent event has happened that is material. So we will send out the request to agencies, like I said, not in March, April, that we need that letter returned back. And again, if you could get your submission back to us within 5 days after we send out that letter to let us know if you had any material item that happened at your agency. Okay. So let's go over the CAFR process regarding an audit review. Many agencies last year when we were sending out emails were confused about we were asking some questions from the CFO and why we were looking at their audit report and that type of scenario. So let me explain the process to see so you can understand better when we start sending emails what's going on. So as I explained in the past, the CAFR unit and the state auditor's office started working in conjunction to review audit reports to make sure that errors that we were noticing happening and make better quality audit reports. Basically, the process is the state auditor will send the CAFR unit basically an email letting us know what audits were turned in that day. The CAFR group has 10 calendar days to finalize our review and to any comments regarding that agency back to the state auditor. That's the agreement. Okay? So normally what we do is we send anything that we find or any comments we find, we send to the agency CFO. We also CC the state auditor's office so that they're aware of these are the issues that we have found in that audit. The agency CFO is responsible for addressing this. So even though, for example, your auditor might be the one that has created or done your audit and created the financial statements, the CFO needs to work with the auditor to get that rectified. Okay, and then a CFO must respond within 3 days when we notify you, instead of sitting on it for a month. Okay. And the reason is, as I said, we have 10 calendar days to get this resolved. So as you can see, we have a short window to get this addressed. I explained, we see the state auditor's office when we find problems with an audit. The state auditor's office can decide to either incorporate our comments in their review back to the auditor, or they can ignore it. That's up to them. But again, we expect the CFO to address the issues that we have brought to their attention because, again, the financial statements are the responsibility of the agency CFO. The problem that the CAFR staff encounter is if we do not respond within 10 days to the state auditor on an audit, the state auditor will release without any comment from DFA. So even if, let's say on day 11, we found a big issue, that audit will be released because we missed our deadline. Is this review important one? As we all know, the state audit rule basically says that share and the financial statement, or share is the book of record, so therefore the financial statements should balance back to share. But the state auditor doesn't have access to share. So in their review, they're looking at it as a high level, where the CAFR unit is coming in and we're actually ensuring that share and the financials balance. We're making sure that the fund financials and the government-wide financials balance back to share. We're also making sure that the note disclosures in the back tie to numbers that are in the financial statements. So in doing this, we try to make sure that it's a high-quality audit that is accurate that gets released. So what was happening, obviously, in the past was that normally by the time the CAFR unit got the audit report was basically by the same time that the audit was getting released. And at that point, it was too late to correct any of these errors. So this working relationship helps to ensure that there's less errors on these audit reports that are being released. And so, of course, I had to get Blair since he always gets me in his training programs. Affiliate and fund affiliate. Again, agencies are struggling, I know, with understanding those two chart fields. Explain. These chart fields, again, are in share to ensure that the intra, which is the relationship between you and another business unit, and your own intra-agency, which is your fund to your fund, are basically maintained and reconciled. So the intent of the system is to use those chart fields to reconcile. It should be able to process reconciliation every month. Now, that CAFR unit does not use the system to do it monthly, but we do use the system to use these chart fields to reconcile at the end of the year. So these chart fields are used on balance sheet accounts and also on income statement accounts that basically relate to any business relationship you have with another agency or between a relationship between one of your funds to another one of your funds. We have to keep track of these relationships so that we can make sure that we balance correctly. Due to this, agencies are still confused on the chart fields and how to use them. So some agencies try to enter the affiliate and fund affiliate on everything. So they don't know what account codes to use it on, so let me tell you, they put it on everything. So they have a balance sheet account that doesn't require it, they put it on. They have an expenditure revenue account that doesn't require it, they put it on. So again, we do not need to overload the system by putting it on everything, just the account codes that are required. And then some agencies forget to put the affiliate and fund affiliate. Of course, they get your message because there's combo codes in there to stop them. And then, of course, they don't know how to correct them, and they're calling us and not sure how to correct the error. And, of course, they're upset because it stopped their processing until they can get some assistance. And, of course, some agencies have really figured out how to circumvent the system, and they just put their own business unit and their own funds in those chart fields, even though the relationship is between them and another agency. These are the account codes that should be using or that are only required to have the affiliate and fund affiliate. The safest thing, especially for the income statement accounts, as you can see, the majority of them end in 09. So that's a safe assumption that if you see it ends in 09, it probably needs the affiliate and fund affiliate. But now, these are the only accounts that should have the affiliate and fund affiliate. So part of our audit, our review at the end of the year is to ensure that at a statewide level that both the interagency, business unit to business unit, and the intra-agency balance. Okay? So basically to do that, to prove to our auditors that the due tos and due froms balance, we have to use the affiliate and fund affiliate chart fields to ensure that. Okay? So when we do our final review with all the agencies, we do double check the affiliate and fund affiliate for the transfers in and out, and for the intra funds and all the due to due from accounts. So here's an example. As you can see for this agency, for this fund, 1600, the account code 141900 is really a zero balance. There is no balance in their intra-fund accounts. As you can see above that, there's accounts in all the affiliate and fund affiliate that is not cleaned up. So the system is going to do, it looks at each individually. It doesn't look at the 1419 in total. It looks at 1419 blank blank, except 1419 256 265, and so on and so forth. So it takes each one and tries to find the matching partner. So if, for this example, the 256 affiliate and the fund 26500 fund affiliate, for the $72,228, the system is going to try and find the match. If you not find the match, it's going to say, hey, this is out of balance and you need to do a journal entry to clean this up, or you need to create an offsetting entry to balance it out. It does not know that in total this whole thing balanced. So as you can see, the CAFR unit had to work with this agency to clean up these account codes so that basically the 1419 account really was zero. Okay. The other problem that for example, on this one is the 1080 affiliate. That's another business unit. You never have another business unit in your intra funds. Your intra funds should only be your own business unit and your own funds. So as you can see, even though it netted to zero, it needed to be cleaned up. And this is an example of an inner fund that the CAFR unit reviews. So as you can see, one, make sure that these balances reconcile with other agencies. So this, for example, line number 1 is saying, hey, TRD owes this money. We'll go back to TRD's due from listing and double check, did you owe them money? And sure enough, as you can see, we say T, it reconciles to their listing. Below, as you can see, Board of Finance. They're saying, hey, Board of Finance owes us money. And then we go back to the Board of Finance and we double check what the Board of Finance has. As you can see on this scenario, there was a difference of $75,000 that had to be addressed. And the other on the top, as you can see, for example, in that fund 640 for affiliate 521, fund affiliate of 1919902, $65,444 we're saying was owed to them. Sure enough, we go in, we check. That's what this is for. Then we go and reconcile this against others. And we also make sure that this ties to the note disclosure is required in the financial statements. So again, like the reviews that the CAFR unit does is a dual process. The CAFR unit has already been printing out general ledger. We're noticing some items that the CFOs need to address before the end of the year. And we're seeing balances that have been in that 2419 account. We're seeing these balances from 14, 15 that are still sitting there. So then these have got to be cleaned out. If it's a non-reverting account, move it to miscellaneous revenue or your appropriate liability. If you're reverting, you need to do an OPR to send the money to the general fund. Also noticing that there's balances from prior years in account code 2349. Due to general fund. These need to be cleaned out before 6/30, before the end of the year. Last year, what we found out was some auditors even wrote agencies up for having old fund or old balances in this liability account, and they were writing them up for non-compliance. Some of you still have balances from prior years in 2909, receipts held in suspense. Those have got to also be cleaned out. Noticed last year, for some reason, some agencies owed the general fund, but they were, instead of putting it in 2349, which is designed for due to the general fund, some of them were putting it in 2329. And these owed to the general fund need to make sure that it is in 234900. And we have noticed a lot of agencies have abnormal balances already on their books. These need to be resolved. So, for example, you have a debit balance an account that should be a credit. Again, auditors sometimes do not address these, and they net them. So, for example, if you have a debit in your miscellaneous, I'm trying to think, in other liabilities, and there's a debit balance, they might include that with an asset account to net that out. And so we need to make sure that all agencies have cleaned out these abnormal balances before the audit has started. So we have some upcoming trainings for the CAFR unit that most of you are used to seeing with the CAFR unit, but we have an additional one this year that we're hoping a few CFOs will take benefit of. In August, 29th through 31st, we are going to do hands-on training. We have reserved the Department of Health's computer lab at the Reynolds Building to basically teach some CFOs how to do financials and how to do the pivot tables and the review exactly like the CAFR unit is looking at and doing for themselves. So that way you're on the same page when we send you questions or comments about your audit, you know where we're coming from. We're going to have 6 separate trainings on these 3 days, so basically 2 per day. Okay, there is limited space. I was told there's only 10 working computers in this small little computer lab. Okay, so it's going to be a first come first serve basis to sign up for this class. You need to contact me and let me know which training you wish to attend, and only 1 person per agency is allowed, again, because of the limited space that we have. Okay, this is not a mandatory training, so CFOs do not have to attend if you do not feel you need this training. This is for those new CFOs or those ones struggling on how to do the financials and the pivots and need some extra help and need to learn basically how to do it as a hands-on type of training. So as we plan, every attendee will be following along on their own computer. You will be in share, downloading your information off of your business unit and how to handle it. Again, early to mid-September, we're going to do the normal every year, the yearly CAFR training that we always do, that we talk about common errors, upcoming issues that agencies need to be aware of on audits, that kind of thing. Right now, the training is tentatively scheduled to be at the SPO auditorium. Not sure if we're going to do that avenue or based upon training today, if we're going to try maybe be more of an online, we will see. But again, this training will be open to the independent auditors. I think last year that was a wonderful feature, and I think it helped benefit everybody regarding that. So at this juncture, the training is over. If you have any questions, definitely call or email me or any of the CAFR staff for any assistance. We will be more than happy to help you. And that ends this.